What's up, everybody? It is Monday, June 27th, 2016, around 8 o'clock Eastern Time, 8 p.m. Eastern Time. It's time for the market analysis video. So today was yet again another down day for the SPY in wake of Brexit concerns and all of that. So as I kind of stated in my previous video, because of the Brexit was so unexpected, there was obviously a large downturn Friday, but then people were probably running scenarios, running their models, everything over the weekend, and so I predicted that there would probably be more downside. I don't think it was that hard to figure that out, and that was indeed the case on yet again very large volume, and so we cleared the 200-day moving average, and we're down in this kind of no man's land of 199.5. Now there is some support in this area, but we're right in the thick of it, so I would be surprised if we were to stay here. That being said, with the volatility the way that it is, it's going to be very choppy trade, and with people liquidating their positions mixed with people short covering in the middle of what's going on, I wouldn't be surprised if there's some sharp twists and turns here in the market, ups and downs over the next over this week. So, and then on top of that, you've got the 4th of July and holidays and vacations and everything mixed in with that, so it should make for pretty interesting times here. So what was also interesting was gold. Gold continued higher, but it actually went red on the day, which was pretty interesting briefly, and then lifted up and went higher into the close. So what this is telling me is that gold is competing with the dollar as a safe haven, and that's limiting its gains right now, but also you see that there is support underneath it. People are buying into weakness here, and so it looks like it wants to continue going higher, because you could say that any relief rally in the S&P 500 would also be a relief rally in gold, because the US dollar will probably sell off in that case. And so I think at the very least a rally in the S&P 500 would be neutral to slightly bearish, but it could go up with the market as well. It's a very interesting situation with gold, because it's acting as a safe haven play, but it also has this status as a commodity where it's priced in US dollars, and so if the dollar weakens as a safe haven, gold should strengthen relatively according to that. So it's got multiple things working for it right now, gold. So the dollar, interesting, obviously rose yet again, sold off a little bit off the highs. It's interesting to see where it will go from here if we get a pause in people buying the dollar and thinking maybe this rout in the euro and the pound is oversold at the moment, because there's obviously a lot of things we have to hear yet, and a lot of things going on in Parliament and in the Fed and so on and so forth. So it should be an interesting situation. The oil continued lower as well, but again well off the lows. So it's actually behaving fairly well considering. So it's got some. It looks like it's got some people stepping in as buyers to underpin oil a little bit, which is interesting, and probably is fairly good for the economy as a whole. I would say what we're seeing in the U.S. versus Europe is actually shows that, in my opinion, is showing that people are going into the U.S. market from Europe. So it's definitely Brexit isn't affecting the U.S. markets as much as it's affecting the European markets, which stands to reason. So one thing that I want to show that's pretty darn interesting was the VIX. So we had a massive down day today, yet again, in the U.S. markets, but the VIX short-term futures, and this is the ETN that tracks it, was actually down on the day today, which was very interesting. You would expect it to continue to pop, continue to go higher. That wasn't the case, so I'm not. It's a real interesting situation, especially when you look at gold selling off and then being bought into the close. It almost makes me think like we could have a bit of a rally here tomorrow that then gets sold off, or something like that. We could see some whiplash in the market, but usually in this kind of situation, you would continue to see put buyers come in, which would make the VIX go higher, which is the VIX is the volatility index, or a fear gauge, a gauge of a predictor of volatility ahead. It uses put and call options to figure that out. But it would be interesting. It's interesting to see that it not move that much. So we have to keep an eye out on that. This might be something where this is kind of right now viewed possibly as temporary, and that we're moving, and that things will calm down in the marketplace in the near future. I'm not sure that I would go along with that, but it's quite possible. We'll have to see. But looking at things to come, I think gold is still a good place to be. I think the dollar will probably won't continue its rise quite as much, especially with Fed expectations dropping significantly. And I think right now the place to be, so cigarettes and Walmart and other stores obviously are handling this very well. They're viewed as kind of defensive stocks. Let's see if I remember the ticker. Campbell Soup. Yep, there it is. So Campbell Soup as well. So the defensive stocks are getting bought and are being rotated into. So those are some plays that you can do. I wouldn't necessarily go out bottom picking yet. Around 190 might be start to get interesting if you wanted to go there, but in the midst of that, I think there's still a lot of play left in this market as far as large moves that could go in either direction. We did have fairly orderly decline, as it were, today. It could have been a lot crazier than it actually was, but still massive volume. I would say wait for that to play out a little bit, and at least look for a reversal candle or two before trying to jump back in long. If you want to go short, and that's obviously based purely on discretion, where you think the economy is going in the future. But I wouldn't be surprised if in the near term there's some Fed statements and some people trying to calm fears over the next few weeks. So that could have an interesting effect on the market in either direction. Markets are generally fairly finicky when it comes to Fed speakers and what exactly that they're saying and how it's interpreted. So it'll be interesting to see how that goes. But it makes for interesting times. So with all that being said, God bless, good luck, great trading.